Welcome to Trader TV, your insight into trading for the professional investor. I'm Hamish MacArthur in Paris at WBR's Trade Tech. I'm here with Wail Azizi from Equiduct. Wail, welcome to the show.
Thank you, Hamish. Thanks for having me.
Why is retail order flow attracting so much attention from institutional traders?
Retail flow is important from a flow characteristics perspective. It's a flow that is non-toxic, that's point and click, that's investment making by definition, which makes it the highest quality possible flow that you can find on the financial market. That flow has been around 3% of pan-European equity volume. And since COVID, we've seen increased participation of retail into the financial markets. So this has increased due to the fact that people are now more interested in financial market because of lockdowns and because of the opportunity also that they can get in the market. The second element is the easier and cheaper access. You can basically today invest in a stock while waiting in line for a baguette, which you couldn't do before. The third element is all the publicity around the meme stocks and GameStop that has brought more retail investment into the market, making it the driving force for price changes in 2020, for instance.
Do you have any evidence to back that up?
As the leading pan-European exchange for retail flow, we've basically seen this firsthand. Bear in mind that we actually cater for 5 million retail investors that are accessing Equiduct through 52 connected brokers. If we look back to March 2022, this month was labeled the big sell-off because everybody was selling their stock. You'd be surprised, Hamish, to know that basically the retail were not selling, they were buying. So we've noticed net buying position in retail for March of more than 405 million euros on Equiduct.
Which types of traders are engaging with you?
It's primarily two types. Retail brokers on one side, which are the brokers that basically channel the retail flow from the app, from the websites and whatever that is into the exchange. Equiduct is free of charge for those brokers. The second category is institutional and the market makers that are there to provide liquidity for the retail flow, and we charge those half a basis point. It's a match made in heaven. Those two categories do not share the same strategies, do not share the same timeline, and do not share the same risk appetite.
What's your view on payment for order flow?
We've published a paper saying that we actually are in support of ESMA in banning payment for flow. Payment for flow is detrimental to the end investor, and we do not provide it. But we offer the next best thing, which is free trade.
How are firms assessing execution quality on Equiduct?
Well, we offer them a best execution report that takes them trade by trade and line by line and compares it to the rest of the market. On top of that, we've contracted with Big XYT, which is an independent TCA provider, to be able to look more in detail at elements like spread attach, spread in depth, EBBO presence time, etc., in order to assess the market quality as a whole. We've been looking, for instance, at the spread attach since COVID. And because we're in France today, let's compare Apex, our execution service, to that of Euronext Paris, which is best of book, and Euronext Paris Central Limit Order Book. You clearly see the once-in-a-lifetime black swan event that was COVID, where you see the three platforms performing as best as they can under those circumstances. And immediately after April 2020, you see those spreads reversing and market gradually coming back to normal. Throughout 2021, you see similar spreads between the three exchange services. And then October 2021, we've seen a tipping point, and Apex started performing better than the two other platforms up until today, free of charge, of course.
What should firms do in order to engage today?
Onboarding to Equiduct entails going through a simulation process where you give us 1 month worth of your data, and then we take it through a simulated environment that yields two main elements. The first is what you would have achieved as a firm in terms of execution quality should you have been members of Equiduct at that time. The second element of the analysis is the cost savings that you would have achieved using Equiduct versus the primary market or the secondary exchange that you've been using. Once the simulation is done, onboarding is pretty simplified. It's a membership to Bourse Berlin, which is the regulatory umbrella under which we operate, and getting in touch with our fantastic onboarded team that'll get you through the line within the next 3 months.
I'd like to thank Wail Azizi for taking the time to be on the show, and of course, you for watching. I'm Hamish MacArthur. This has been Trader TV at WBR's Trade Tech in Paris.